morning. Welcome to Glenmark's Q3 earnings call. I would first like to introduce the members of Glenmark management. We have with us Glenn Saldana, Chairman and Managing Director, Glenmark Pharma Ltd. We have with us Robert Matzik, President, North America and API Business. And we have with us B.S. Mani, Chief Financial Officer and President, Glenmark Pharmaceuticals Ltd. Before we begin the call and open the call for questions and answers, I would like Bob Matzik to give the opening remarks regarding the U.S. business. Over to you, Bob.
Okay. Thank you, Jason, and thanks everyone for joining us today. The North American finished dosage form business, which includes Canada and the U.S., closed the third quarter with recorded revenues of $113.7 million U.S. dollars versus last year's corresponding quarter, which was $183.27 million U.S. dollars, a decrease of 40.21%. Sales from last year's corresponding quarter reflect the launch of ezetimibe, generic version of Zetia, which had exclusivity in the United States in December 2016. On the approval side, the U.S. was granted 4 approvals in Q3. They were as follows: aprepitant capsules, Haley 24FE, which is norethindrone acetate and ethinyl estradiol, and first fumarate 1 mg/20 microgram. Haley FE 1/20, norethindrone acetate and ethinyl estradiol tablets USP 1 mg 20 micrograms, and first fumarate. Norethindrone acetate and ethinyl estradiol tablets USP and first fumarate tablets 1 mg and 20 microgram, and that's the generic equivalent to minastrone 24FE. Glenmark continues to gain market share on both new and existing products, building new business for both new and current products. In total, we have 20 ANDAs approved year to date, with 2 Canadian approval and 12 U.S. approvals in the last 2 quarters. 3 of the U.S. approvals are tentative approvals. The company also filed 4 ANDA applications with the U.S. FDA this past quarter and plans to file an additional 8 to 10 applications in the forthcoming quarter. Glenmark's marketing portfolio consists currently of 130 generic products authorized for distribution in the U.S. market. The company currently has 58 applications pending in various stages of the approval process with the U.S. FDA, of which 26 are Paragraph 4 applications. From a market perspective, we want to make note of several things. First, price erosion continued to be a challenge for the business. As most of us are aware, this was primarily due to ongoing consolidation of purchasers, and as an industry, this will continue to be a challenging environment, and we should expect it to remain that way for at least the next 5 quarters until we launch GSP 301 Ryaltris. We plan on filing our application for Ryaltris within the next 3 months. Despite ongoing price erosion in our business, as well as those of many of our other generic manufacturers, we continue to see more initiatives to regulate pricing and or implement pricing transparency. Other recently implemented regulations continue to negatively impact generic drug manufacturers. At Glenmark, we believe that generic drug manufacturers already are and will continue to be important players and stakeholders in addressing and solving drug pricing problems in the U.S. It's also important to note that while challenging, these market conditions are universal for companies operating in the U.S. generic pharmaceutical space. For this reason, we are optimistic regarding our strategy to pursue growth through diversification of our business segments, including complex generics, specialty branded products, and innovative products to create growth and value for the company. The global API business had a strong quarter. Revenue from the sale of API in regulated and semi-regulated markets was $35.83 million U.S. for the third quarter ending December 31st, 2017, against U.S. $28.54 million for the previous quarter, recording an increase of 20.62%. During the third quarter, Glenmark filed 3 U.S. DMFs and 1 EU CDP DMF and completed several other regulatory filings in key markets. Major products that contribute to the sales growth include adapalene, amiodarone, etoracoxib, lorcanopine, and perindopril. And with that, I'll turn it back over to Jason.
Thanks, Bob. Just continuing on the business operations, first we start off with India. Our Sales from the formulation business in India for the third quarter was at 5,785 million, recording growth of 11.92%. As per IMS December 2017, Glenmark is ranked 13th with market share of 2.28% and is the second fastest growing company as per IMS MAT 2017, December 2017. The India business continued to strengthen itself across the various therapeutic areas, which is the cardiac segment, the respiratory segment, and the derma segment. During the quarter, Glenmark launched Apremilast, an advanced oral and safe treatment for psoriasis in India. Glenmark was the first company to receive DCGI approval and marketing authorization for Apremilast in India. The company is among the leading players in the field of dermatology, and the launch of Apremilast reinforces Glenmark's commitment to bringing advanced therapies to Indian patients. Glenmark forayed into the OTC space a few years back. In a short period of time, the company has built a sizable OTC business driven by its three major brands operating in the consumer space, Candid, V-Wash, and Scalp Plus. Through the introduction of its brand V-Wash Plus, Glenmark has successfully created the female intimate hygiene category in India. Further, Candid Dusting Powder, the 30-year-old flagship brand for the company, has been a prescription leader for the treatment of antifungal skin infection and is now a leading product even in the OTC business. According to IMS data, Candid Powder has jumped 2.3 times in sales within 3 years post the OTC promotion. All the three brands have a dominant market share in each of its operating markets as per IMS ORG data consistently for the last couple of years. The Africa, Asia, and CIS region. This region performed well in the quarter, recording growth of 28.29% at 321.30 million. In the third quarter of the financial year, Glenmark Russia recorded strong secondary sales growth as compared to the market growth, which was at 7.1%. The subsidiary ranked 41 as per MAT November 2017 in the retail segment. Glenmark Russia is also among the top 10 derma companies presently in the Russian market. Glenmark continues to secure a strong position in the expectorant market and is ranked 4th as per MAT November 2017. During the quarter, in the other CIS region, Glenmark also launched one new product in Ukraine and Uzbekistan. During the third quarter, the Asia region recorded strong secondary sales growth, with most subsidiaries performing well in the third quarter. The Glenmark Africa region also posted strong secondary sales growth, aided by good performance by the subsidiaries of South Africa and Kenya. Europe formulations. Glenmark's Europe operations continue to perform well, recording growth of 14.84% at 2247.52 million. The European subsidiary performed well during the quarter. The Western European recorded good growth during the quarter, driven by a strong performance by the German subsidiary. The Central Eastern European region recorded secondary sales growth of 26% during the quarter. During the quarter, Glenmark successfully closed the decentralized registration procedure for generic Seretide Accuhealer in the Nordic region, including Sweden, Denmark, Norway, Finland, and Iceland. This will be Glenmark's first inhaled respiratory product approval in Europe and reinforces Glenmark's commitment in the respiratory area. The commercialization of the product would depend on national approvals as well as substitution and pricing approvals. This continues to emphasize Glenmark's focus in this complex product segment and in Europe. Latin America. Glenmark's revenue from Latin America decreased by 5.15% at 898.38 million. The performance of the Latin American subsidiary was impacted due to the weak performance of the Brazilian subsidiary. However, the Mexico subsidiary continued to perform well during the third quarter. R&D. The company has a pipeline of 9 core assets, which include 4 NCEs, 4 new biological entities, and 1 biosimilar candidate in various stages of clinical development, focused in the therapeutic areas of oncology, respiratory, and dermatology. First, an R&D update on the oncology assets. GBR 1302, which is in phase 1 first-in-human studies to determine MTD in patients with HER2-positive cancers, is actively enrolling. Dose escalation continues with clinical sites open in Europe and US, and several additional sites were opened in January 2018. The study is currently dosing patients in cohort 8 and up to 10 cohorts are planned. In addition, Glenmark announced in January 24th the GBR 1302 interim biomarker data, which was presented at ASCO SITC Immuno-Oncology Symposium. GBR 1342, a phase 1 first-in-human study to determine MPD in patients with multiple myeloma, dosed its first patient in December 2017. The study is currently in cohort 2, and clinical sites continue to identify patients for possible enrollment into the study. Up to 10 cohorts are planned for this MTD study. The study's primary objective is to assess safety and tolerability of increasing doses of GBR 1342. Additional study objectives include awareness of assessment of biomarkers, immunogenicity, and measures of anti-tumor activity. 1372, for GBR 1372, Glenmark plans to file a phase 1 first-in-human study by Q4FY 2019. Dermatology asset GBR 830. So phase 2B study of GBR 830 in atopic dermatitis is set to begin in Q1 FY 2019 in centers across US and Europe. Glenmark will present phase 2A data on GBR 830 in atopic dermatitis at the annual meeting of the American Academy of Dermatology taking place in February 2018. Respiratory assets, which Bob just mentioned, Glenmark expects to file its first NDA for the treatment of patients with seasonal allergic rhinitis in the first half of CY 2018. GSP 304, Glenmark has completed a phase 2 trial on GSP 304 and is planning to consult with the FDA prior to initiating further clinical trials in FY 2019. GBR 310, the biosimilar candidate for omalizumab intended for the treatment of asthma and chronic idiopathic urticaria. The phase 1 study enrollment has been completed in February 2018 and 168 patients randomized and dosed. Top-line results are expected in July 2018. GRC 398815 has completed preclinical studies. It is an inhibitor of the ROR gamma T receptor. Prior to filing initiation of phase 1, Glenmark is conducting translational studies to further validate the molecule as a treatment of COPD. And the final asset, which is GRC 27864, Glenmark recently announced in January the initiation of a phase 2B dose-finding study in patients with moderate osteoarthritic pain. The phase 2 study will take place in India and enroll 624 patients with osteoarthritis of the knee and hip to evaluate the safety, efficacy, and biomarkers associated with GRC 27864 compared to existing NSAID and selective COX-2 inhibitors. GRC 27864 is a candidate for out-licensing. Before we open the call for question and answers, some notes that I would like to read out. The gross debt for the company was 4638 crores. The cash for the company was 1035 crores as on December 31st, 2017. The net debt was at 3603 crores as of December 31st, 2017. This is as compared to 3667 crores in March 31st, 2017. The forex loss for the third quarter was at 48 crores. As there was 26 crores of forex gain in other income arising from the previous 2 quarters, that forex gain was first neutralized and the balance 22 crores of forex loss is present in other expenditure. Thus, if one realizes the other income is negative for the quarter. In terms of working capital, inventories was at 2059 crores, debtors was at 2510 crores, payables is at 1903 crores. The fixed asset addition during the quarter is 175 crores. Intangible addition is 62 crores, including 10 crores of software. The R&D for the third quarter was at 280 crores, which is about 12.7% of sales for the quarter, and 802 crores, which is about 11.8% sales for the 9-month period. With this, we would like to open the floor for questions and answers. Over to you.
Thank you very much, sir. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you so much. First, on your commentary on the U.S. environment, you mentioned that you expect pricing erosion to be challenging at least for the next 5 quarters. Are you seeing any signs of further deterioration or improvement that can come through on the pricing erosion side? Because a lot of our peers have indicated tapering off or stabilization of pricing. So just wanted to get your views on that.
Yeah, I think the the pricing erosions has remained pretty constant for us. As we move forward and we head out of the RFP cycles, we might see a little bit of improvement, but, we're expecting it to remain in the same area for the next, 5 quarters or so.
That would be in the high single digit, double digit, or?
Yeah, that would be around 13% in core business.
And just on the gross margins, gross margins deteriorated significantly, on a quarter-on-quarter basis. Despite an improvement in U.S., I understand that, India was very lumpy in the September quarter. But is there any, how should we look at gross margins? Is this the new base for our margins?
So, hi, this is Mani here. So, I think we should look at the gross margin as it was in the Q2 levels, because as you can obviously see in the Q3, one was obviously the erosion in the US, but more importantly, India was in the second quarter as a percentage of total sale was about almost 32-33%. This time it's come up to 26. So that's a high GC kind of business. So I think going forward, we look at Q2 like 33.5% being the GC, being the basically the material cost and the GC margin being higher, yeah.
Okay, because I thought the second quarter lumpiness in the India business was because of GST, restocking. So that's not a normalized run rate for the India business that we would see.
No, as we see the quarters going forward, we obviously have done some investments, and I feel that even in the current quarter, of course, business have a little bit cycles here and there, but if you look at the current quarter, we still have done well in India business. It's about 11.5% growth, and when you look at the pre-era of GST, you actually add back about 2.6%. So all in all, India business has done well, but I think we will see better sales in the next quarters, but more importantly, we see the GC margins getting restored back to about 33.8%.
Okay, thanks so much.
Thank you. Our next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, just trying to understand this R&D investment better. So what percentage of the R&D is currently getting deployed on the specialty side, which is both the complex generics as well as the NC initiatives?
So Prakash, right now it's running at about 8% of the total revenues are going towards specialty and innovation. And obviously, if you add that back, right, the core business is extremely profitable and continues to generate significant cash, right? The reality is, as a company, we are investing in the specialty and innovation piece, right? Because we think that's where the future lies. And it's running at about 8% of total revenues.
Okay. And in the last R&D day, we had given some, broad color on our investments towards, Abraxane, Suboxone, Novaring.
Yeah.
So what kind of, development stage they are into? And we talked about filing around late CY18, early CY19. Are we on track with that? And also some comment on Welchol and Renagal, please.
Yeah, so in FY19, we will file, we anticipate filing Novaring, Concerta, and our first respiratory product, which is GSP 103, which is actually Flovent. So these are the three we think we'll file in FY19. As far as Welchol and Renvela, again, it's extremely hard to predict. It's been so many years since we're waiting for these approvals, and we really have no visibility on when we will get these approvals from the agency.
Okay. And lastly, on the, the other specialty, especially the respiratory pipeline 301. So you talk about filing by next quarter. How should we think about monetizing? And same with Xolair. So we are tying up or we are going on our own? And which year do we expect the approval?
So on 301, we are filing this product in the next 2 or 3 months, and the current situation is if you see outside the US, right, I mean, we are currently in several discussions to partner 301 out for some of the markets, particularly markets like Australia, Japan, China, and various markets. So it's a very exciting product, even ex-US. As far as the US goes, clearly we are still working out our launch strategy. So we can't give too much visibility other than the fact that we are anticipating a launch in Q1 of FY20. And I think over and above that, we continue to have discussions even for the US with partners for the OTC component of GSP 301. So that's the current situation on GSP 301. As far as the Xolair biosimilar goes, I mean, we anticipate we will start phase 3 if, assuming the phase 1 is positive, and phase 1 we'll report top line in around July timeframe. Assuming that is positive, we anticipate going to the FDA for an end of phase 2/start of phase 3 meeting, and hoping to start phase 3 in Q4 of FY19.
Okay, that is some time away.
That's FY19, next year, Q4 of next year, phase 3.
Okay, and lastly, do you anticipate this R&D expense, moving up on absolute terms or in percentage to sales terms? If you could give some color, given that all your advanced pipeline is advancing in advanced stage.
So we are right now at around 11.5-12% of total revenues this year, and next year we see that number staying at around 12% of total revenues.
Understood. Thanks. I have more questions. I'll join back again. Thanks.
Sure.
Thank you. Before we take our next question, we would like to remind participants to ask a question, you may press star and 1. The next question is from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Yeah, morning. Thanks for taking my question. So in one of the earlier, you mentioned R&D for specialty and innovation at 8%, right? So that's a significant, more than 50%, close to 60% of your spend is now going in innovation related work.
Sorry, say that again, Shayan. So we are saying 8% for both specialty and innovation.
So, okay, and the rest is for generics, right? So,
correct.
For generics, only 40% of your R&D spend is for generics. Rest is for specialty and innovation.
Correct.
So, Glenn, the thing is, I understand from a long-term perspective, you may see value here. But, there are a lot of uncertainties that one deals with, right? My point is, like, how do you, assess that? Because these investments, what's the certainty? How do you want to monetize? Don't you think it's important to kind of have some, benchmark or guidelines to kind of work with here?
So, Shayan, the bulk of the investment is going in projects. So 301, we spent a ton of money last year. Okay, if you see FY17, right? We spent, on the phase 3, we spent a lot of money, and now we've got a product which we are now filing in the next 2 months, and we will monetize. So that's the monetization. The visibility is very close since we've got passing phase 3s and the rest. If you look at now where we are investing, most of that 8% is on the Xolair biosimilar, because we are anticipating starting phase 3s. We are currently just completing the phase 1s. We are starting phase 3s next year. We are also investing in GSP 304, which is a nebulized product. So I think the certainty, these are not pure innovative products. So while we are saying 8%, I would say out of the 8%, as on today, the most of the investment is still going more behind the specialty products as compared to pure innovative products. On the pure innovative products, we're still at about 4.5% of sales or somewhere thereabouts.
Mm-hmm. Okay. And any visibility on licensing deal? You mentioned, some deals can happen by end of this fiscal year. So what's the outlook on that?
So we have multiple ongoing discussions. We have discussions on GBR 830. for partnering that out. We have discussions on some of the oncology drugs. We've got some good data coming out of GBR 1302, and we did a presentation on some of the biomarker data, which looks exciting. We also have discussions on some of the specialty products, including, as I mentioned, GSP 301 and the Xolair biosimilar. I mean, these are some of the discussions that we're looking for partnerships on. So I think it's fair to say that I think over the next 12 to 15 months, you should see a lot of activity on the partnership side, right, on our portfolio.
So, Glenn, do you think that, you have been having this discussion for some time, so you need to do more work before you can actually sign the deal? I mean, it looks like it's, being pushed out somewhat.
I think we are, so right now, we are not getting that sense, but you never know, Shayan. I mean, these things, doing a deal is pretty complex in terms of, trying to match what we want out of the deal and what a partner wants. So I think those are some trade-offs that we are constantly making, right, and taking decisions on potential licensing deals.
Okay. And the last question on the U.S. Generics, I think you mentioned 13% erosion, right, in the core business. Now, that looks to be on the higher side. So are you basically factoring in a competition in mupirocin, which is your largest product, to, drive this? Because I don't think there is anything, very high value in the portfolio other than mupirocin.
So we are clearly taking at least one competitor into our analysis, right? Coming through, I would say, over the next six odd months, right, into mupirocin, and that's what's giving you that level of price erosion.
Okay. And, just Glenn, one thing, like, last quarter you talked about potential US revenue more than $125 million this quarter, which hasn't come through. So what went wrong here? Is it the Econdix VBAD consolidation or some new launches? I mean, what was missing, compared to the expectation?
I mean, the operating environment is extremely tough, okay, Shayan, and it's getting harder to gain market share even on 2-player markets and 3-player markets. I mean, you're seeing competitors defending their market shares pretty aggressively, and that is bringing down the overall. And then at some point, if you go after greater market share, the price is coming down, so you're ending up with taking the whole market down. So I think it's a very, very tough environment. And as Bob mentioned, the U.S. environment continues to remain very challenging.
Okay, thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Anyone who has a question may press star and 1. We'll take the next question from the line of Abhishek Sharma from India Infoline. Please go ahead.
Yeah, just one question on the rest of the world. There's a significant jump this quarter. I was going through past few quarters. The last time we had this high number was in 4Q14. So any color on this? Is this currency? Is this any particular territory?
Well, our ROW markets continue to do well for us, right? Between Russia, CIS, Asia, and Africa, right? All three geographies are doing well for us. I mean, the reality, if you look at our business today, out of, I would say, if you keep the US aside, which is about 30-35% of total revenues in this quarter, right? Almost 70-75, between 65 to 70% of our total business, right, continues to grow at close to 15-odd%, right? And going forward, if you look at FY19 also, right, we expect this piece of the business to continue to grow in excess of 15%, with improved margins coming consistently out of all geographies. So other than the US business, the 65-70% of total revenues continues to do well for us. And that's what, will drive the growth, right, over the next 5 quarters. I mean, the US business, as Bob mentioned, our visibility is that growth will really, we will have a much better handle on growth post the launch of Ryaltris, right, GSP 301. Until then, there's significant amount of uncertainty in the US business.
Yeah, but just on this rest of the world, I mean, is there any specific territory which is standing out?
So I think Russia is a big driver for us longer term and will continue to remain a big driver. I mean, we have several new product launches coming out of Russia, right? And we have 5 launches next year. So I think growth, particularly in the Russia CIS region, will continue to remain strong.
Okay. And just your gross debt and the net debt number for this quarter?
So the gross debt for this quarter was 4638 and the net debt was 3603.
All right. Okay. Thanks.
Thank you. Anyone who has a question may press star and 1. Next question is from the line of Aditya Khemka from DSP BlackRock. Please go ahead.
Hi, good morning, guys. Thanks for the opportunity. Glenn, you mentioned on the 2 products, Welchol tablet and Welchol suspension. Do we have a TAD yet on the 2 products?
Yes, we do, Aditya. But I think, we've had several TAD dates in the past and, there have been further questions. So I'm not sure about what is the relevance, of those TAD dates. As on today, we have nothing outstanding in terms of questions, but it's hard to predict, whether we will get approved on the TAD date or no.
That's a fair point. But could you, if it allows you to, I mean, can you disclose which month the TAD date is in?
I don't think we can put that out, Aditya.
Okay, that's fair. Also, on the same question, Glenn, on Voltaren Gel, I think we have a filing. Do we have a TAD date yet on that?
On Voltaren also, we have a TAD date, Aditya.
We have a TAD date. Okay. Yeah. Okay. And there is nothing pending on Voltaren as well, as of now?
I'm not so sure, Aditya. I don't know the answer to that.
Okay, that's fair enough. And lastly, Glenn, we did not get the approval on Epiduo on time. So what is it, in your opinion, that has delayed approval there, and by when should we expect the Epiduo approval?
So we got a CR which we are responding to, and we anticipate, I would say, in the early part of FY19 we should get approval on it.
Understood. And lastly, on the margin front, right? So I heard Mr. Mani say that the margins will probably normalize from here on. But if I were to, and I know it's difficult given the operating environment in US, must be difficult for you guys to do any sort of forecasting. But if you were pushed to the wall to sort of venture a guess on your FY19 EBITDA margins, what would that be, Glenn? Because it's important for us to understand that to build our models. So
all I can say, Aditya, is our margins from here. So this, for me, Q3 was the lowest quarter, okay, both in terms of sales and in terms of margins. And I think from here on, every quarter, right, you should see sales go up and margin improvement coming through. In fact, I mean, even starting from Q4, right? So one is Q4, of course, as Mani mentioned, the gross margins will come back to where they were in Q2. And from there on, we should continue to see the margin improvement coming through in the business. So, I mean, that's the only visibility we can give. And as I said, for 65-70% of our business, right? We have clear visibility on, growing the business in excess of 15% in FY19, and we have margin improvement coming through, right? For 65-70% of our business. It's the 30-35%, which is the US, right? Where clearly we are struggling to provide any guidance or visibility because of the high level of uncertainty in the environment.
Fair enough. And Mupirocin, you are taking one competitor. Are you aware of a filing
Absolutely.
there? Are you aware
So
of a filing?
we know of a filing, but we also know that it's for some reason the approval has consistently got delayed. But we still believe that, on the conservative side, you should see a competitor post 6 months from now.
Fair enough. Fair enough. And lastly, if I may ask, Glenn, on this India business growth, right? So we did 12% odd this quarter, and if you were to sort of, crystal gaze there, barring any changes in the regulatory front, what should be your growth rate on the India businesses in FY19 and 20?
Well, I think India will grow north of 15% very, very comfortably. And in India, the other advantage we have is we have two very unique product launches coming up, which are in-licensed products, patent-protected products, one in oncology and the other one in the diabetes space. And both these, the oncology product we anticipate will launch in the next 3 months. And in diabetes, we, towards the second half of FY19 is when we launch the product. So India looks very solid for us, at least for the next few years. We feel pretty comfortable growing this business at about in excess of 15%.
Sure. And my last question. So I think previously, at some point in time, we had given a guidance of about 23%, 22% EBITDA in FY21, given the way you saw the business ramping up. So at the current juncture, given the way US market is behaving, you think that 22-23% EBITDA margin guidance for FY21 is still valid?
I think it is. So we still maintain that we'll get there. I mean, for us, we think we've hit the bottom of the US cycle, and from here on, we still have some uncertainty over the next about 5 quarters. But if we get the new product approvals, right, automatically you will see a constant recovery in the US business, both in terms of top line sales and in terms of margin. So I think that's the only uncertainty we are dealing with. Will we get the new product approvals on time, right? And that's been the biggest challenge, I would say, over the last 3 months, right? We've had a lot of uncertainty on when the product approvals will come through and what's the time frame, right? But if we see a constant stream of new product approvals, like we've seen in the past, we think you'll see even a recovery in the US generics business. I mean, that's the way we look at it. The rest of the business, as I said, margins will continue to grow from here. Even the businesses like Latin America, where we've struggled historically, I mean, Brazil for us, this year is a cash break-even and margins are positive. And I think next year you should see, margins going to double digits coming out of even markets like Brazil, which we've historically struggled with, right? And Latin America as a region should look strong for us from next year onwards because of the product launches and the work we've done there. So it's been a long investment phase of over 10-12 years, but I think now it's finally beginning to pay off, basically.
Sure. And Jason, if you may answer this one, please. So there is 8% of sales being spent on specialty and innovation. So if I add that to your EBITDA margins, you are roughly at 25% EBITDA margin for FY18 on the generic side. Would you also have a sense of the ROE on the generic side, leaving aside the specialty assets and liabilities?
No, I mean, at this point in time, we won't have that answer, but we can definitely work that out and give it to you. It will be definitely much, much higher than the overall company ROE and ROC.
I think one of the things we are thinking of doing going forward, Aditya, is I think from next quarter is we're trying to provide some color on the different segments of the business. Okay, that will give you a clear visibility.